Yeah, welcome to another episode of Simply Bitcoin IRL. Today we have a very special show for you guys. We have British Hodl. He's absolutely crushing the game on Bitcoin Twitter and also Bitcoin YouTube as well. And really been looking forward to this episode. I love the message of do whatever you can to try to get to one Bitcoin. So we're going to explore those topics today. I've been looking forward to this conversation all day. But before we get started, I do want to give a very special shout out to Simply Bitcoin's lead sponsor. Of course, I'm talking about Bitcoin Well. Bitcoin Well is the best place to build your automatic self-custody Bitcoin stack. It's a publicly traded company coming out of Canada that recently expanded to all 50 US states. It's a self-custody Bitcoin on-ramp. What does that mean? That means that when you buy Bitcoin on Bitcoin Well, as soon as the funds clear, it goes straight to your self-custody Bitcoin wallet address, which perfectly aligns with Simply Bitcoin ethos of the separation of money and state, because after all, self-custody is the revolution. To get started, go to bitcoinwell.com today. All right, everybody, no more delay. Let me bring up British Hodl on stage. How you doing, man? How's life?
Listen, life is great. I'm doing well. Thank you for having me. Firstly, I think you guys have one of, if not the best Bitcoin, channel on YouTube, and I'm glad we survived the assassination attempt. You got clipped in the ear, but we're back and we're fighting, so that's good.
Yeah, man, it was quite a busy weekend. I did not stop either on Twitter or on the phone, texting and just kind of figuring out what the situation is. But super grateful for the entire Bitcoin community that had our back, and of course, Team YouTube that fixed the issue pretty quickly. Anyways, Hodl, I think you've made the phrase famous, right? Get to one Bitcoin. It's obviously clearly resonated with a lot of people. So I want to start off the conversation with that. Why is it so important for people to get to one Bitcoin?
Look, we're dealing with an asset that finally, in the entirety of human history, we finally have an asset where there is actually a limited supply. This is the first time in human history that we've ever seen anything like this. And what that tells you is that you can't just get to this whenever you want to. You can't just find Bitcoin whenever you're ready for it and hope that the future generations will be able to get enough of it, because there is only 21 million of it. So there is a race on, and if you're not at one Bitcoin yet, in my opinion, you're losing the race and you're going to be irrelevant in a future Bitcoin world. You have to get to one Bitcoin, and I think the supply, the limited supply of Bitcoin dictates that you must have at least one Bitcoin. And right now you have a chance of getting that anywhere in the West. And after we go on this next little run up, I think that's going to be completely priced away from a lot of people.
Absolutely. I mean, I feel like it already is in a way, like $59,204. Like, what is that? I think that's a little bit less than the average salary for an American, and definitely a lot higher than the average salary of most countries worldwide. So yeah, and I remember in the early days, I did whatever, not in the early days of Bitcoin, but my early days in Bitcoin around 2016. I did whatever it took. I think I took 80% of my salary of what I was making at the time, and I just dumped it into Bitcoin. I had no idea about where Bitcoin was going in the future. I think I did it out of desperation because I didn't like my current life situation. But looking past, I think that was one of the best decisions I've made in my life. And I know what a lot of people are thinking, because at that time, back in 2017, I thought, holy cow, I think my first Bitcoin price was around $600. I was like, this is insane. Like, this is very expensive. Just hearing the stories of people getting sub $100 Bitcoin, and I'm like, I'm buying this at $600. I'm buying this at $1,000. I'm buying this at $3,500. I'm buying this at $10K. I've missed the boat completely. Looking back, I'm like, why didn't I do more to accumulate more Bitcoin at those prices? I think the same thing is going to happen 5-10 years from now. People are going to be looking at the days where you can get sub 100K Bitcoin and being like, why was I not doing enough? What would you think of that, British Hodl?
Yeah, I mean, right now everyone's sitting around doing what they're doing, thinking, they've got enough Bitcoin for the future, they've got enough Bitcoin for their children, they've got enough Bitcoin for their progeny. for whoever comes after them to carry their last name, and they're going to one day realize that instead of fucking around on Twitter or whatever else that they're doing, what they should have been doing is accumulating Bitcoin to get to that minimum of 1 Bitcoin, if not more. I'm not saying stop at 1 Bitcoin, but I'm saying you've got to get to that 1 Bitcoin. Whatever, if you're not at 1 Bitcoin, whatever you're doing today, you are going to regret in 5 years. I don't care what it is. I don't care how happy it makes you feel. I don't care how much of a happy hippie you are. I don't care how many hugs you got. I don't care how many people told you you're a wonderful person. If you don't have 1 Bitcoin in 5 years, you're going to regret it.
100%. Now let's talk about the potential of 1 Bitcoin, right? I think a lot of people are saying, what do you mean? Like $59,000, worth of purchasing power is enough? Like, what are you talking about? And I remember the price estimations that Saylor gave in his most recent talk from Bitcoin 2024. The bull case was 49 million in 21 years. The base case was, I believe, 13 million, and the bear case was 3 million. Is that what you're anticipating? Like, when you say 1 Bitcoin, is this 1 Bitcoin for someone that lives in the West? Is this 1 Bitcoin for someone that lives in the developing world, where $59,000 is going to take you a very, very long way if you're in Argentina, or if you're in Venezuela, or in Southeast Asia? But, $59,000 isn't going to exactly take you a very long way if you're, in the United States, Europe, et cetera, et cetera. So what do you mean by that? What are your expectations, and what is the time frame here, British Hodl? Because I think a lot of people, they want to escape the rat race now, right? So what do you have to say about that?
Yeah, look, at the end of the day, a lot of people want, and I don't know if you know my history about price predictions, but they're absolutely amazing. I said we were going to get to $100,000 by May 7th, and one of these May 7ths, we will get to $100,000 by May 7th, right? So my short-term price predictions are absolute total garbage, but I find them entertaining, and that's why I keep putting them out there. The main point is this. I come from the United Kingdom. Anyone in the United Kingdom or the US or a G7 nation should have their sights set on a minimum of 1 Bitcoin. Completely understand if someone, in the rural heartlands of Indonesia can't get to 1 Bitcoin, because that's just not how it works. And there's probably some adjustment of get to X amount of Bitcoin that person needs to do. But I don't talk to that person. That person manages to benefit from the things that I say, and that's fine. But I'm trying to create the North Star for the most amount of people that I speak to, right? And I think that is 1 Bitcoin. And of course, there's different conversations being had in Bitcoin. The beautiful thing about Bitcoin is no matter who you are, you can have the conversation that you want to have. And for me, the conversation that I want to have is for the people like my parents, who have done the right thing, quote unquote, for 40 years, immigrated to the United Kingdom, bought property in the UK, invested, spent time, raised 2 children, done the right thing, sacrificed, and are now finding out that all of that hard work was basically, drained away because of the amount of money printing that's happened, and the value of the properties has not gone up as much as it should have. That is who I speak to. So if someone who's not got a pot to piss in has a problem with me saying get to 1 Bitcoin, I'm not the person you're looking for. You might need to go look for someone else who can give you a more encouraging message. For me, the people that I speak to, what they need to hear is this is the hardest asset, most secure asset, the most limited asset humanity has ever created, and you better pivot some of that real estate, you better pivot some of that stock portfolio, and you better get to 1 Bitcoin right now, because if you don't, you're going to be left behind just like you always are, because now that BlackRock's in the game, now that Fidelity's in the game, now that all these wirehouses are coming down the pipeline, now that Morgan Stanley's in the game, they're skipping everyone between $500,000 and $30 million net worth. All of those majority real estate owners are getting completely skipped over. It's the multi-hundred millionaires that are being called right now to get into Bitcoin. So my message is for the people who've got that $500,000 to $30 million net worth and the urgency of getting to 1 Bitcoin. And if anyone else hears my message and gets the benefit of it too, that's absolutely great. But my main point is for people like my parents who need to wake up now.
Yeah, absolutely. And let's talk about that a little bit more, right? Which is just and there's something also like Hodl that you were mentioning that, I come from a different perspective, right? Which is I believe that Bitcoin is for everyone, but realistically, I think, we're going to get to a point where the fees on chain are going to be so expensive to a point that I think the majority of people that use Bitcoin in the future are actually going to be using it on the second and third layers. But I believe right now, people do have a small window where, they can get into Bitcoin and accumulate enough Bitcoin where in the future, even with the increase in fees, they'll be able to transact using the main chain. So, but I think it is like kind of like an exclusive message in a way, basically saying that your messaging isn't for everyone. Like,
Yeah.
you double down on that and you just say, you know what, like this is just my audience who I'm talking to. I'm talking to a relatively wealthier, older individual that has had time to accumulate wealth. They're diversified, whether it's in equities or in real estate, and you're advising them to transfer some of that wealth into Bitcoin. That's your target audience. That's what you're saying.
Yeah, look, at the end of the day, Bitcoin is for everyone. This is the first time we've got an asset that a multi-billionaire like Michael Saylor, or a multi-hundred millionaire, or a multi-deca millionaire, or a multi-single digit millionaire, or someone who's worth a few hundred thousand, or someone who's worth a few thousand, or someone who's absolutely broke can buy the exact same asset at the same cost. This is the first time in human history that we've ever experienced that. I'm not ignoring that absolute magic about Bitcoin. The fact that Michael Saylor can buy Bitcoin at the same price that I buy Bitcoin, and I buy Bitcoin maybe 1% of a difference compared to what Michael Saylor gets in terms of transaction fees because of the volume of purchasing, is unbelievable. That doesn't happen in real estate. That doesn't happen in equities. It doesn't happen in any other market. This is the first. It doesn't happen in gold. In gold, people who are poorer are forced to pay up to 40% premiums on their gold. And I was in the gold industry, right? So I know how this works. They're being forced. If you buy a gram of gold versus an ounce of gold, the premiums on the gram of gold are unbelievable. These people are paying 40. It's like handing over a $100 bill and getting back $60 worth of gold, which means that gold has to go up $40 per gram before you break even. That's the trap that normally poorer people are placed into. But now you can do that with Bitcoin. Now, saying that, while I appreciate that, my specific message and the audience that I'm speaking to are the people like my parents, and that's who I choose to focus on. But that doesn't mean Bitcoin's not for everyone.
Yeah, absolutely. Absolutely. And okay, I hear you. All right. So let's talk about that, because you're talking about essentially how difficult it would be for gold to essentially double or triple from its current market cap, not to mention the fact that gold has a baked in inflation rate. I think it's about roughly, 2 or 3%. And Bitcoin's inflation rate is destined to essentially go down to zero. I believe right now it's at 1.42% or 1.43%. So let's talk about that, right? Because one of the main themes this cycle is the idea of diminishing returns. Now, I have my own perspective on this. I think a lot of people have PTSD from the prior cycle. And I think the prior cycle was heavily affected by the China mining ban that literally happened in the middle of the run-up last time. And you literally see the hash rate falling off a cliff, the price following, obviously because all those miners had to sell Bitcoin in order to relocate to more favorable jurisdictions. I don't think that's going to be the case this time, as most of Bitcoin mining is located in a more friendly jurisdiction. Of course, I'm talking about the state of Texas. A big portion of Bitcoin mining is located there, and it's the hash rate is more decentralized than it was back then. So my question to you is, what would you say about people talking about this whole aspects of diminishing returns, right? So, a lot of people are saying, Bitcoin's going to top out at 100K, 120K max this cycle. Personally, I'm a little bit more biased, but I do see that's the general consensus, this trend. Just like last cycle, the general trend was, we're going to break 100K guaranteed. And we only peaked out at, I think it was like 69,000 or something like that. So what's your take? What's your opinion on the whole diminishing returns conversation?
Yeah, look, there's one, quote unquote model that has been gaining traction on the idea of diminishing returns. And before I have to grab the spaghetti, one thing I will say is
Where is
that
the spaghetti, British Hodl? Where is it?
I can get the spaghetti if you want me to, but I don't want to be insulting. So we'll leave that for Uncle Giuseppe. But look, the point is this: everyone can come up with their ideas about diminishing returns or not, or whatever else. Just think about this logically. Forget whoever's right, forget how many math degrees someone has. Let's just simplify this to the bare bones. You have an asset that has a 21 million Bitcoin cap. That's it. The thing that's buying it, the thing that's trying to escape energy from one thing to into this thing that's absolutely limited, is completely unlimited. There is an unlimited amount of fiat money in the world, right? Just right now they've multiplied the amount of money that they've created through derivatives and everything else to a $900 trillion US dollar empire, right? There is an unlimited amount of money in the world. And then when you take into account the studies that Bank of America and all these other people have done on the supply dynamics of Bitcoin, that when things start getting tight, the multiplier effect, the bull market multiplier effect, as Bank of America put out last time, is $118 to 1, which has never ever been seen on any other asset humanity has ever seen before. To put that into what I mean by that is, for every dollar that goes into Bitcoin, the market cap goes up by $118 because of the supply dynamics. It's like let's say I got this cigar lighter, right? This cigar lighter, there's 10 of these cigar lighters, but the true market price of this cigar lighter is not based on the full 10 because 8 people are never going to sell it. So it's based on the 2. It's based on how much money is chasing the 2 remaining lighters. That's the issue with Bitcoin. You can't just create more out of thin air like you can do with real estate. You can't just create more unicorns by creating venture capital incentives. You can't just create more gold by digging more gold out of the ground. And now you've got people like BlackRock. BlackRock's, I think, has had 1 day of net outflows from their ETF since inception in January. Every single time the market goes down, they buy. Yesterday, they bought 3,500 coins. The day before that, they bought 4,000 coins. This is a behemoth that has come into this game, and I've been shouting about this for a year on my YouTube channel, that BlackRock is coming for everything. They want all the coins because that's the only way in a monetary network that you can actually control the network. You have to control it by owning a lot of it. That doesn't mean they can screw around with the network, but in order to have influence, in order to have power in this new emerging world, you want to own as much of it as possible. It's like the first person that discovered that property could be built on top of land. Their main goal should be to acquire as much land as possible because that property is going to be built on top of it. So not only do you have the Bank of America multiple, which is getting tighter and tighter as people like BlackRock and everyone else keeps buying these assets, and another thing I've been shouting about for a year is that there will be a rotation of owners, and that's what's going on this year. 2024 will be known as the year where the Bitcoin owners rotated from the lettuce hands to the diamond hands. And the diamond hands, we all thought we knew what diamond hands were. The real diamond hands are the ones that are in the BlackRock ETF, are in the Fidelity ETF, are in all these institutional funds, because they never ever need to sell. They already got the yacht. They already got the 2 houses. The kids have already been to school. They already got enough money to do whatever else they want to do. They have to own this to protect the wealth that they've already accumulated. And now they're here. That's the real diamond hands. Those are the BlackRock boys are the real diamond hands. And they're going to come here to try and take as much Bitcoin as possible. And every time the Bitcoin price slides, they're going to buy Bitcoin. And they're never, ever going to let it go. And that's going to cause the multiplier effect to tighten up. And the price is just going to continue going up and up and up. So as far as anyone believing in diminishing returns go, maybe. But there will be a cycle where those diminishing returns, the idea of diminishing returns gets completely turned on its head, simply because of the supply cap. There is a supply cap and there's an unlimited amount of fiat money, and that will cause a squeeze at some point.
I absolutely love that, man. That's a great description. Now, going back to the BlackRock conversation, right? how much did that change the game when BlackRock entered? And I truly believe they definitely influence. You see the way that Gary Gensler reacted to it, and current administration isn't exactly the friendliest towards the industry. And of course, BlackRock has this tremendous amount of influence, political influence. And you could see that they essentially forced the acceptance of the ETF. And what I would say is like, what is the significance of that? Like, what is the significance of BlackRock putting essentially the stamp of approval on Bitcoin as an asset? And you see Larry Fink going on the legacy financial media, and he's using a lot of the vocab that us Bitcoiners use on Bitcoin Twitter and Bitcoin shows as well. What was the significance of that, Hodl? How did that change the game?
Yeah, look, a lot of people don't realize, right? A lot of people in retail finance don't understand how big the institutional financial world is. The top 500 asset managers in the world control $150 trillion of assets. To put that into perspective, around 20% of the volume on the US markets is retail, right? So 80% is institutional. All of those 500 asset managers and every single person that works in every single office of each one of those financial of asset managers takes direction from BlackRock. So for the fact that Larry Fink is out here saying Bitcoin is a flight to quality, we're seeing people, move towards a 1 to 3% allocation, et cetera, this is where the world is going. It's the second that BlackRock filed that application, if you want to go back and look at the history on my YouTube channel, the second they filed that, I started screaming, this is happening. Because I think they had about 566 or 567, so I can't remember the exact number, but just to put this into context, let's say they had 567 applications for an ETF. There was only one denied. And the one that was denied, the entire industry was denied, and no one ever applied for an ETF ever again. So they've got a pretty solid track record on things happening. So as soon as they applied, I knew it was happening, right? And by the way, the ETF was my main goal. When I first understood Bitcoin, because I thought it was a scam right from the start, right? I thought this whole thing was a scam. It doesn't make any sense. I'm in gold, et cetera, et cetera. And then one time I was listening to the Bitcoin Standard, and he mentions the idea of stock to flow. And with my gold experience, the moment he said stock to flow, I don't mean the price model or anything like that, just the idea of stock to flow, it was like the matrix just opened up for me. I could finally understand what was going on here. And I realized I was looking at Bitcoin like an equity when I should have been looking at it like a commodity. And the moment that happened, everything sort of made sense for me, and I bought my first Bitcoin walking from where I heard that message to home. I'd already owned my first Bitcoin because it was like the light bulb just went on. But the point is this: BlackRock is the difference maker. BlackRock is the thing that's going to open the floodgates. BlackRock wrote a letter to all of their companies that they invest in. By the way, they own every single piece of every single company in the world, pretty much. They wrote a letter to them and they said, right, you now have to start caring about the weather, right? And guess what? Every company in the world started caring about the weather. So guess what happens in the next letter when they say, you now have to start caring about the environment, and the only way you care about the environment is to support Bitcoin mining. Every company in the world starts caring about Bitcoin mining. What happens when BlackRock says, in order for you to care about the environment now, you now need to own some Bitcoin on your treasury? Every company in the world starts owning Bitcoin on their treasury. This is the power of BlackRock. They understand how to move capital to get things done in the world. In addition to that, Larry Fink has a very, very long history of taking assets that were like Bitcoin, were just properties, securitizing them and building debt markets on top of them like he did with mortgage-backed securities in the 70s. So this is all coming. The game plan is very clear. In fact, when they said that, I said we're 3 months away from a major publication saying that Bitcoin is now good for the environment. 3 weeks after they did that, KPMG put out the report saying Bitcoin may be good for the environment, because this is how the game works. They knew they were going to do this. They knew it in 2018. They knew it in 2021. And of course, when they filed, they knew exactly, they were ready to go. So that's who you're competing with at this point. You're no longer competing with the morons on Twitter, right? You're no longer competing with the people like me and Nico shouting at you to get Bitcoin. You're competing with the people that are going to ring their multi-billion-dollar clients up and say, hey, Larry wants you to get a 1 to 3% allocation in Bitcoin. And they're going to say, okay, that's the end of the conversation. That's who we're competing with, and that's how important and revolutionary and impactful BlackRock has been to Bitcoin.
Yeah, absolutely. I just want to emphasize YouTube when he says moron. Of course, he's saying it metaphorically.
And I'm talking about myself too.
But okay. So yes, I completely agree. I don't think it's a coincidence that they just dropped the whole ESG thing, which is just hilarious.
No, Bitcoin is ESG 2.0. I guarantee you that. Bitcoin is ESG 2.0. Mark my words, within the next half a decade to a decade, Bitcoin will become ESG 2.0, guaranteed.
So, and I kind of want to focus on an aspect, right? It was just your focus was on BlackRock entering the game. I completely agree with you. It was extremely influential, especially from the institutional aspect, right? You had Goldman Sachs that came out recently that they have exposure to Bitcoin via the ETF. Multiple banks, I believe it is Wells Fargo. You have the Wisconsin Pension Fund, the second largest bank in Europe, PNB Paribas. Forgive me for the, there you go. Forgive me for the pronunciation. So you have, and that's just to name a few. So you definitely have major exposure from these traditional financial institutions, and they're all going through BlackRock. Now, from a Bitcoiner's perspective, and I understand British Hodl, you don't take this angle, but we do here at Simply Bitcoin, because we're focusing on Bitcoin more so from the revolutionary aspect, the separation of money and state. What would be your opinion on the centralization of this amount of Bitcoin in custody? So not only is BlackRock using Coinbase as a custodian, but actually 8 out of the 9 ETFs that were approved are using Coinbase as well. I think the only one that isn't is Fidelity. So, and of course, you know, if you take a look at American history back in the late 1920s, early 1930s, you have the infamous 6102 order that, of course, you know, all Bitcoiners know this. And you had essentially the seizure of gold, you know, by the U.S. government, basically making it illegal for Americans to hold gold. And then Americans were given, you know, paper instead. Fort Knox was built for this entire region, for this entire purpose. What would be your response to that? Like, in the way that I'm seeing it from a Bitcoiner's perspective is like, this is a giant honeypot potentially for future governments to potentially seize, especially if they find themselves in a pickle.
Yeah, the good news about America is that it's not run by the government, right? Anyone thinks America's run by the president should have learned by now in the last 6 months that it clearly isn't. So America is run by its financial markets, and the one thing that you don't see happen in America is asset seizures. The gold thing, yes, it happened. However, what you got to realize is only about 12% of the gold was actually handed over to the government, right? So am I worried about that? No, I think it would be, you would have to get to literally the end of the world before America decided to seize Bitcoin or seize any assets from an exchange traded fund. That is the foundation of America. America is its capital markets. And so I don't think that happens. However, I will say, if you're very, very comfortable with self-custody, that's the first route that you should take. I think that everyone should have an element of a mixture, right? That's my standard thinking. I think everyone should have a mixture. Everyone should have a certain percentage in self-custody that you completely control, and then maybe a certain percentage or in a retirement account or whatever else in an ETF. And as far as the ETFs all using Coinbase, that is a cause of concern. And so what I do is I split up my GBTC position into the IBIT fund, which is BlackRock, and FBTC, which is Fidelity. I would split up your ownership of the ETFs based on the custodian, not on the company that's promoting the ETF. And so that's what I decided to do. My GBTC positions got evenly split between IBIT and FBTC. And of course, my self-custody Bitcoin is secured via multi-sig in 3 different jurisdictions.
Yeah, and I think that's the way to do it. I completely agree. As a Bitcoiner, you have to leverage multi-sig. And yes, if you do geographically separate your seeds, you put yourself in you essentially become a sovereign individual, really. So let me kind of go back to this idea of mixture, which I would say is unpopular with certain Bitcoiners, but I would say is more popular with older generation, specifically high net worth individuals that are kind of like in the boomer Gen X generation. I would say if you're younger, younger people in general go down the full self-custody aspect like myself, because we see it from a different perspective. I think the older generation sees it more from an investing perspective rather than the younger generation where they kind of see it a little bit more from a revolutionary perspective. So I kind of want to talk about that a little bit. And I know that this is something that perhaps you don't cover a lot about on your show. What do you think about the idea of the separation of money and state? Because I think a lot of the hurt that people are going through, specifically the younger generations, is literally caused by the government's ability to just create money out of thin air. And as you know, British Hodl, anyone who owns assets gets wealthier on paper, not actually wealthier purchasing power terms. And anyone who doesn't own assets, they save and earn in fiat, like they just get absolutely demolished. And this is one of the reasons that Bitcoin was created. It's in the Genesis block, right? Chancellor on the brink of the second bailout for banks. So what do you think about the peaceful revolution, the separation of money and state, British Hodl?
I think it's absolutely essential. I think that you have to have the perspective that, yeah, I can't trust the system 100%. I think it's absolutely, that's why I said I have a percentage of my Bitcoin in self-custody in 3 different jurisdictions. And then I have some in the system. Now, why do I have it in the system? Because there's going to be things that show up that are advantageous to have Bitcoin in the system. For example, if you want to go and take a loan against your Bitcoin and you've got, self-custody Bitcoin, you're going to have to pay an interest rate that's orders of magnitudes above what you can borrow against on an ETF. You'll be able to borrow against an ETF at 50 basis points higher than Fed rates, whereas you're going to have to probably pay, 10% above Fed rates just to get a loan against your Bitcoin. So it depends what you want to do with that, right? The other advantage is once you have the ETF, experienced investors will understand a simple covered call strategy, which means that now every Bitcoin that you own through an ETF turns into an income generating asset. And then every 4 years, that income compounds because the price goes up, but the percentages stay the same. So now, let's say you got $1 million of Bitcoin, you're making 1% a month. You're now, in 4 years, your $10,000 a month goes up to $40,000 a month. And that's going to be very attractive to a certain type of investor. I'm not saying to everyone, but to a certain type of investor. So all these things are coming down the line for Bitcoin, and I think that the smartest thing to do is have exposure to everything so that you can take advantage of everything. And if what you feel comfortable with is pure self-custody and selling off a little bit of your Bitcoin every month to live on if you don't have a job or you plan to retire or whatever else, that's your prerogative. But for me, I think with the skills that I have, with the 18 years of investing experience that I have and the work that I've done and the people that I've worked with and the lessons that I've learned and everything else, I think for me, it's advantageous to have a vehicle that allows me to generate a cash flow on a monthly basis, allows me to take loans, very, very cheaply. Because if I can take a loan at 3% and you're taking a loan at 15%, I'm 5 times ahead of you. And that's just the bottom line, right? Everything comes down to your competitiveness at the end of the day. So, I think there's going to be this transitionary period, and in that transitionary period, people that have exposure to a little bit of the Bitcoin, quote unquote, in the system are going to do much better off. And so that's what I choose to take advantage of.
Yeah, and I want to talk a little bit about that, right? And this is actually something that I've heard sailors say in the past, which is this idea that in the future, you won't have to sell your Bitcoin. You can borrow against it. Now, I'm going to say this with a giant caveat to everybody. Be careful when you take loans and you use Bitcoin as collateral, because Bitcoin is extremely volatile and you will get margin called at one point. So I think if you approach it with a tremendous amount of responsibility and a very small percentage of your stack, potentially it could be beneficial. But I think that there's going to be more offerings in the future, Hodl, in terms of people leveraging their Bitcoin without really having to sell it and being able to get cash out of it in the process. I love the products that are currently offered. The interest rates are quite high, but I think that has to do more so with the Fed.
I don't think so. I think it's to do with insurance, right? I don't know how you insure. I don't know how you insure a self-custody product to the point where you can get, interest rates at 50 basis points plus Fed plus 50 basis points. It doesn't, the maths doesn't work out in order for you to do that. It will always be more expensive if it's a self-custody product, right? It's the same thing. Your insurance premiums are always higher on things that
Well,
like what.
but hold on. It's not exactly full self custody. The way that Unchained and Lend, I believe, do it is they'll do a collaborative custody where
Yeah.
the client has one key,
So
Unchained, Lend
it's
has
not
one
even
key, and then
self-custody anyway. I agree with you. That's my
but
point.
they
That's
okay.
my point. It's not even self-custody anyway, right? So then why don't you take advantage? Experienced investors are going to look at that and go, well, I don't even have custody of my asset anyway, so I might as well use the best interest rate product. Why do you think all these companies are struggling? I said this a year ago.
No, but wait, hold on. The downside of that is the rehypothecation risk, though, right? Like that's why people are willing
What?
to pay the premium.
But what with an ETF? What's the rehypothecation risk?
Okay, so explain that, right? So
Yeah.
with an ETF, how would you leverage your position in having exposure to a Bitcoin ETF to can you borrow against your position?
Yeah, so you borrow against your ETF shares, right? But the actual ETF has to own the underlying asset. So a lot of people have this delusion around how an ETF works, and what they're really getting confused with is futures. Futures are completely different to an ETF. An ETF is one of the best products out there for a quote unquote synthetic ownership or synthetic control of an asset. In essence, as soon as the ETF turns into an in-kind product, which it will at some point, you'll be able to call BlackRock up and say, I want my Bitcoin, and they'll be able to deliver it to you. So the rehypothecation risk is so overblown when it comes to ETFs. A lot of people talk about that with the gold ETF and this, that, and the other. And it's really not that much, it's not a problem. The issue comes with the futures. The futures is where all the manipulation happens. The futures is where all these people start causing issues with price action and movement and this, that, and the other. So an ETF is a revolution on investing. It is a revolutionary product when it comes to investing for TradFi markets. That doesn't mean you shouldn't be skeptical of TradFi markets. I'm not saying that, but to lie about what an ETF is and how it works and the rehypothecation risks and all this other stuff, that's a bit a little bit hyperbolic, let's say.
Okay, so let's talk a little bit about the ETF, right? Because obviously you're a fan of it. You have figured out ways to leverage the ETF to your advantage. Question for you. So I've had Caitlin Long and Larry Lepard on my show in the past, and it's funny because I had two episodes. One with James Lavish and Greg Foss. By the way, we miss you, Fossey. Please come back. And I had another episode with Caitlin Long and Larry Lepard. And it's funny because both parties had different takes on this. Larry Lepard and Caitlin Long came from the camp of the potential rehypothecation risks with the introduction of an ETF and the potential downward sell pressure because of the sale of paper Bitcoin. And a lot of people, and you have experience in the gold markets, British Hodl. So a lot of people speculate that in gold, this is how they suppress the price of gold, right? This idea of rehypothecation. Do you not believe that could be, that could potentially be a risk in Bitcoin?
I think that there's always going to be shorting in the markets, right? And the issue is that futures have always been around. You've always been able to short Bitcoin via the futures markets, and so is that a risk? Sure. Is that more of a risk?
Hey, hold on. I just want to clarify for the audience. What does futures have to do with rehypothecation?
Well, the point I'm trying to make is that a lot of people can try and confuse and convolute these two things, but they're two separate products, right? Rehypothecation can happen on both sides of the market, but a futures product and an ETF product are completely different. And by the way, if you look at the biggest, baddest lawsuit that happened against JP Morgan for the gold and silver markets, what you find is that really the only manipulation that they were doing was quote unquote spoofing. Now, what that is, spoofing is, let's say the gold price is $1,500 and they put a bunch of sell orders in there at $1,400. And as the price comes down from 1,500 to 1,400, they withdraw their orders from the market. That's called spoofing the market. That was it. They have never found an immense amount of manipulation like the gold salespeople want to tell you. It's never happened. I was in the gold space. I like this has been my world for a number of years. So the and I'm again I will reiterate what I'm saying does not mean that you have to trust the TradFi markets, and the self custody is the primary option for most people. However, you have to be careful about what you believe and what you see versus what has been proven. And so that's my perspective on it. I'm not that concerned by it. I'm not concerned that BlackRock, the biggest asset manager in the entire world, is going to blow up one of their products because they've got a reputation to protect. I'm more comfortable with BlackRock than I am with BlockFi, Celsius, or any other quote unquote Bitcoin or crypto company.
Okay. All right. So what's your take on so right now, and I think I saw a graphic from River Financial where they really kind of laid it out. And one of the unique things about Bitcoin, I think you were mentioning this earlier, is the fact that the vast majority of supply, and this is due to Bitcoin's essentially immaculate conception, and it really being a grassroots movement, specifically in the beginning, the vast majority of its supply, about 11 million Bitcoin, are still held by individuals. So now we're starting to see institutions come in. Of course, I think BlackRock holds about 350,000 plus or so, give or take. Michael Saylor holds about 210,000, give or take. Haven't seen the latest numbers, but what would your perspective be? Because I think that it's a good thing that the vast majority of the supply is held by individuals and is not held by government. It's not held by large institutions like BlackRock. It's not held by public companies.
Me too. I completely agree with you. I think that's the way that it should be, and I hope that that's the way that it stays. And I would warn that these companies are going to create incentives to inspire people to put their Bitcoin into their products. I guarantee you that MicroStrategy is being spoken to by BlackRock to create incentives for MicroStrategy to put their Bitcoin into the BlackRock product as soon as it becomes an in-kind product. I guarantee that's happening. But I agree with you. I think it's much better if real people hold their actual Bitcoin versus putting it all into institutional hands. But that won't stop them trying to create incentives to pull the Bitcoin into the funds. So it just is what it is, right? That's what's going to happen. Do I think that's what should happen? Or it doesn't matter. What I think doesn't matter. This is what is going to happen based on how this game is played. Either you can accept that that's how the game is played and try and fight it, or you're just going to sit there, shout at the wind, and it's going to come back and hit you in the face. Like it just is what it is. That's how the game is played.
Yeah, of course. And YouTube, when he says hit you in the face, it's metaphorical, of course.
Right.
But I do want to talk about some of the ideas that we were talking about earlier, which is this idea of one Bitcoin. It has become your tagline. It's like me, I say Bitcoin or slavery. British Hodl says get to one Bitcoin. What's the rest of the thing that you say? It's hilarious.
Listen, there's only 3 rules to Bitcoin.
There we go. Yes.
You want me to go through that? I don't know.
Yes, of course. Hit it, man.
So look, there's only 3 rules to Bitcoin.
Tame it a little bit. Tame it a little bit.
Step number 1, you buy Bitcoin. Step number 2, you shut the hell up. And step number 3, you get fabulously wealthy. It doesn't sound so good when you say shut the hell up instead of what it's meant to be, right?
Yeah. No, of course it doesn't sound that. The other one has more punch for sure. So let's talk about that, right? So I think a lot of people right now, I think, kind of a little bit bored. The market's going sideways. We're chopping. I've been saying on the show for a long time now, if you're selling right now, you're selling to either a nation state or BlackRock. Don't do that. Definitely, don't sell your sats. Hold on to them for as long as you can. But I think a lot of people are anticipating a crazy 2025. So for someone who has reached that one goal, that goal of whole coiner status, or perhaps they've reached the goal of half a coin status, what should they be expecting in 2025? And without naming any names, I think some people are even advocating for potentially selling when they believe that we reach a top in 2025. What would you say to that?
I'm gonna go grab my spaghetti right now. I know, without mentioning any names, everyone will know who the hell we're talking about, right? So, look, I think 2024, I think we're sideways until the election. I think that that's the
Why?
safest.
Why are we sideways till the election?
Look, look, every country has a circus, right? And now we have the biggest, baddest circus in town, and that's the American politics. We had the British politics, got the French politics, and now we got the American politics, which is the biggest circus that you can find, right? And it's in town, and what that means is everyone's emotions are going to get drummed up. Right now, based on the historical 30-year average of how much cash is on the sidelines, we are double that right now. There's double the amount of cash on the sidelines than the 30-year average in markets. And so what that means is that everyone just doesn't know what the hell to do because nobody knows what's going to happen. And that's the job of the politicians. The politicians are designed, their whole demeanor is to scare you, is to be there to cause fear, to drive you to the polls, et cetera, et cetera. And when that's going on, nobody wants to invest because you don't know which way the market is going to go. Are we going to get a right-leaning person? Are we going to get a left-leaning person? What's the policy going to be for the markets, et cetera, et cetera. So after the election, certainty comes back, and certainty drives investment. So that's what I'm waiting for. I think that's the safest mind state to be in, sideways until November. Saying that, what is happening right now in the underbelly of the market is that there is a rotation happening of owners, and I've been shouting about this for a year. As soon as these ETFs come out, the owners that think they're trading, that think they're holding, that think they were diamond hands, that think they want to take some money off the table, they're going to give up their Bitcoin, and it's going to get sucked up by people that are the real diamond hands that never ever need to sell their assets, and that's what's going on right now. That's 2024. 2025, I think it's going to get weird, right? In 2025, you're going to start seeing Morgan Stanley is obviously, their advisors are now selling. I think it's like 15,000 advisors are calling people actively to sell Bitcoin. I think by the end of the year, that goes up to 50,000 people. And there's 330,000 financial advisors in the USA alone. So 2025 is going to be institutional balls to the wall selling of Bitcoin going on. And I think that's going to get extremely weird. You've seen, in little time periods, little snapshots like the ETF a couple days ago when we saw the big price run up. Obviously today we're seeing a price run down, but a few days ago, price run up. That was caused by around about $250 to $400 million worth of purchasing, and it added $77 billion to the market cap of Bitcoin. That is a 300 to 1 approximate multiplier on the price. Now, what happens once the rotation is done and these people stop selling, right? What happens once all the selling just turns into holding? What happens when the miners don't need to go to sell their Bitcoin to generate revenues and money for their expenses? What happens when they don't need to sell? So there's a lot that's going to change here, and I think 2025 is going to get very, very weird. If I was anyone in the year that we went from a year, even I, right, looking at it going, BlackRock's going to come in and change the game. Even I didn't think that in the space of 1 year we would go from Bitcoin is for drug dealers to a Bitcoin house, a Bitcoin Senate, a Bitcoin president, a Bitcoin vice president, and everyone in the United States going balls to the wall on Bitcoin. Even I didn't expect that. I didn't expect the president of, potential president of the most powerful capital markets in the world to say that we're going to launch a national strategic reserve of Bitcoin, right? So what happens if you decide and you listen to these morons, these shame
Metaphorically.
They listen to these shamos that are basically saying, okay, it's got to hit some proverbial line, and then I'm going to dump my Bitcoin so we can multiply our Bitcoins, which was the tweet that I retweeted, right? And then suddenly America starts, its mission of buying 1 million, 2 million, 3 million Bitcoin. You're completely finished. So I personally don't think that anyone should take that risk. I certainly won't be taking that risk. Does that make sense? That's just my opinion.
It makes absolute sense. Do you think the cycle theory is still alive and well?
We're going to see. I don't know. I'm having less and less faith in the cycle theory based on America, not anyone else, America. Because I didn't really think El Salvador was that significant, right? I said that a few years ago. Based on America coming in and starting to try and build a strategic reserve, we got the lowest amount of Bitcoin on exchanges right now. The other day, Binance had to send 30,000 Bitcoin from their own personal stash just to maintain liquidity levels, right? based on America coming in and saying we're going to buy 1, 2, 3, whatever million Bitcoin for America, I don't know. I'm losing faith on cycle theories. I'm losing faith on all that. The only thing that seems to make sense is the S curve, and as a theory, not even as a price model. So I don't know what's going to happen. All I know is it's going to get weird, and you better have strapped in by then.
Yeah, 100%. I agree. And yeah, it's definitely going to be not only an interesting Q4, right, which we're about to enter in a couple of days, but it's definitely going to be an interesting 2025. What's your take on the upcoming FOMC meeting?
I think Jerome Powell has basically pivoted the conversation at Jackson Hole. I think we've now been on a rate hiking cycle for a couple years, and now it's time for a rate lowering cycle. The way I like to look at the Federal Reserve, the analogy that I use is, it's like there's a plane in the sky and it's flying, it has no real destination, and a new pilot gets dropped in every few years, and his job is just basically to keep the thing in the air, right? That is what the Federal Reserve's doing, and so sometimes it veers slightly to the left, and then it needs to veer slightly to the right, and that's what's going on right now. If anyone wants to understand what's going to happen with the Federal Reserve, all you got to do is watch the U.S. 2-year chart, zoom it out to a 40 years, see the trend line, and understand that that's the trend line that we're following. So I think we're going to accelerate over the next, I would say, 18 months, maybe 2 years. We're going to accelerate down to 2 to 2.5, 2.75%. And then a few years after that, we're going to go back down to the trend line of 0.5%.
Gotcha. Interesting. What do you think about the current debt situation? James Lavish calls it the debt spiral. What's your opinion on that? And how could people protect themselves? The obvious answer is Bitcoin, but what's your take?
Yeah, listen, look, there's this one book that I think everyone should read, and it's called Lords of Easy Money. And I think that you should maybe even get Christopher Leonard, who wrote the book, on the channel to explain what's happened. That book summarizes well. So I completely screwed up 2008, right? I completely didn't understand how the market was going to work. It was my first ever quote unquote recession, which was a good training ground for that being it, right? I completely and utterly messed that up in terms of opportunity. It took me 12 years of business and preparation and cash flow and everything else to get ready for 2020. As soon as 2020 hit, 12x my net worth based on what I knew was going to happen based on 2008, and then discovered Bitcoin. So that book summarizes everything I learned self-analyzing over that 12-year period about what happened in 2008 and then what's going to happen in the future. To put a summary on it, they're going to print the shit out of the US dollar. Simple as that. So if you want to protect yourself from that, you need to own hard assets. The main way to protect yourself is to own assets that go up in price by as much as the inflation that happens to the underlying base currency. I had people in 2020 telling me that their Morgan Stanley advisors had done a great job that year because their portfolios were up 30%. And I said, congratulations, because they printed 40% of all the US dollars in existence. So you're actually down, you're actually negative 10%. And they couldn't believe what I was saying. But that's the reality of it. And the only way to do that, the stock market isn't doing that. Well, you know the stock market's not doing that when the ultra wealthy are doing private equity. The stock market is exit liquidity for the ultra wealthy. So Bitcoin is the only thing that will protect against that because of its supply cap. And that's the one thing that you should have some exposure to. I'm not here to tell you what your exposure should be, but you need to understand this, you need to learn this, and you've got a very, very short period of time to do this while we're range bound for the next few months.
So when you talk about, and again, kind of circling it back to just your general motto, your catchphrase that, it's basically gone viral at this point. The window of opportunity is closing. So what do you mean by that exactly? And what's at stake if someone misses that window?
Look, let's say Bitcoin goes to $100,000. Let's not even imagine the $300,000, $400,000, $500,000 price point. Just say $100,000. You know how many people have just a random $100,000 sitting around to buy something that they don't even understand? It ain't that many people, right? They've got property. The majority of those people are going to be in the $500,000 to $30 million net worth range. Those people are primarily in real estate. So now to generate $100,000, yeah, somebody with a $30 million portfolio might be able to do that. But somebody with a $5 million portfolio probably needs to sell a house in order to generate that liquidity. It's not going to take you 3 to 6 months to sell that damn thing in order to generate that liquidity. And that's for an asset that you just discovered, right? No one's going to go through the ball ache of doing that. So that's why I'm saying now is the time. You've got a limited amount of time. We've already priced out the poor. We've already priced out the middle class worldwide. We're now pricing out the upper middle class worldwide, and soon we're going to price out the lower multimillionaire worldwide, because a multimillionaire who's got a $4 or $5 million net worth does not have $200,000 or $300,000 lying around in cash, right? Most people don't understand that because they've never really touched any wealth. They don't know that somebody who can be worth $4 or $5 million and not have $100,000, $150,000, $200,000 in the bank because it's in assets. Those are the people that need to get their head straight right now, because you are walking into a mess here. You're going to walk into an environment where your property portfolio is not going to keep up with the amount of money that's being printed. Your stock portfolio is not going to keep up with the amount of money that's being printed. The gold is definitely not going to keep up with the amount of money that's being printed, because the supply cap is the most important thing, and now is the time to understand Bitcoin. Whether you execute at this very day or not, that's not what I'm here to do. What I'm here to tell you is start learning, get serious. The fact that you gotta be one egotistical SOB to say that Larry Fink and BlackRock are in this asset on TV talking about it, but I don't wanna learn about it. If that's your mindset, you deserve to be poor.
Yeah, I mean, that's a very strong statement. But let's just say that the writing is on the wall for you. I mean, this is something, especially if you've been in Bitcoin for a little bit. This is my 8th year at this point, and just from personal experience, what I've seen is most people I eventually convince, not the first year, maybe not the second year, but eventually, because of NGU technology. NGU technology is beautiful like that, right? It humbles everyone eventually, because they might not believe in the asset at first, but when you've been telling someone to buy Bitcoin since it's been $1,000 and now it's at $59,000, they tend to start listening to you, right? What is that, like a 59x? So yeah, I completely agree. I think that it's the window is closing to be a whole coiner. I think it's always going to be a good idea to buy Bitcoin. I think Bitcoin is the superior asset. Max Kaiser says that everything trends to zero as it relates to Bitcoin. I completely agree with that. It is a superior money. But I would say the opportunity, right? The opportunity for you to really benefit right before this thing becomes financially mainstream. I do believe that window is closing. But on record, I think everyone could buy Bitcoin. It's a good opportunity for everyone. But for the specific subsect of people, and I know who you're talking about, British Hodl, yes, it's like the older generation, boomer generation. They have the traditional portfolio between real estate and equities. I don't think they understand how much of a superior asset Bitcoin is, and it's hopefully they get on the train before it leaves the station, so to speak. Anyways, we are getting to the top of the hour, and I do want to be respectful of your time, so I do want to give you the opportunity to leave a last message with the audience.
Well, look, firstly, before I talk to the audience, Nico team, everyone, thanks for having me. It's been a pleasure. My mom watches your channel, so hi, Mom, I guess. Look, at the end of the day, it's now time to get serious. All of this, BS that we all do, talking on Twitter all day, YouTube all day, everything else is not relevant. Your progeny, your children, your grandchildren, whoever's carrying your last name, 30 years from now is not going to care that you were here to watch a YouTube video. What they're going to care about is how much Bitcoin you have, because it is a monetary network. It's not a human network. So the amount of Bitcoin one owns is the most important thing, not the amount of people that are into it. So get to 1 Bitcoin, make that your North Star. And if you are at there, get to a certain amount that's a percentage of your net worth. and protect it at all costs. Of course, the primary objective is self-custody, but then don't be shy to look at these other opportunities that are coming in to the world right now as a result of how much progress Bitcoin has made into this world. The main point is the sharks are now here. Pull your head out of your backside. If you're sitting there calm, relaxed about this, start getting urgent, start feeling the panic, understand that your time is running out, and understand that you must get to 1 Bitcoin. And ultimately, there are always only 3 rules to Bitcoin. Step number 1, you buy Bitcoin. Step number 2, you shut the hell up. And step number 3, you get fabulously wealthy. Nico, team, thank you so much for having me. It's been an honor.
Well, British Hodl, thank you so much for joining us on Simply Bitcoin IRL. Really enjoyed this conversation. Definitely have to get you on the live show, man. This has been great. I think that's a very solid message. And yes, I think everyone should strive to get to 1 Bitcoin at least. We've been telling you for many years now to definitely stack, right? So yes, I think the window of opportunity to becoming a whole coiner is definitely closing. By the way, it's not only me saying that, it's not only British Hodl saying that. I think Adam Back was saying that too, right? Like we're reaching the very peak of the amount of people that are going to be able to afford to become whole coiners. $59,000 is a lot of money from a liquidity aspect, like you said. Anyways, guys, if you enjoyed the show, there's about 2,071 of you guys watching live between YouTube and X, and about 50 or 60 of you guys watching live on Rumble. If you guys enjoyed the show, make sure to smash the like button, share the video, and of course, tune in tomorrow to the live show at 12:15 p.m. Eastern Standard Time. I'm your host, Nico. Our guest for today is British Hodl. British Hodl, why don't you tell everybody where they can find you on the interwebs?
Just go to youtube.com, type in British Hodl, and you should see this face pop up. Go to Twitter, type in @British Hodl, or X, sorry, type in @British Hodl. You should be able to follow me on there. But follow these guys as well. They've been attacked by YouTube. We want to stop that. YouTube needs to bend the knee to Bitcoin. I think they are the first ones that they've done that to. So hopefully I'm safe now too. So thank you for taking the first ear clip for all of us.
I appreciate you joining us, man. And again, thank you, YouTube team, for reinstating our channel. Appreciate it, guys. And we'll see you tomorrow on the live show.
So it was brought to you by BitcoinWell.com, on a mission to enable independence.